Well, leading our bulletin tonight, South Africa facing a downgrade, but not to junk status just yet. While Finance Minister Pravin Gordhan has been trying to reassure investors in London and New York, Moody's has placed the government on a review for a downgrade. In a statement today, Treasury says that Moody's officials will be visiting South Africa next week, between the 16th and 18th of March. It says in its meeting with the agency, it will highlight its collaborative actions to accelerate inclusive growth, as well as steps taken to reinforce stable industrial relations. There are three major rating agencies. S&P and Fitch only change their ratings in the middle of the year or at the end of the year. Moody's is subject to different regulations and can review and change its ratings whenever it feels necessary. Economists say the review comes earlier than expected after Moody's gave South Africa a negative outlook in December, meaning a downgrade is possible in coming months. Even if Moody's downgrades South Africa's sovereign rating, also known as the long-term bond and issuer rating, this will not take us to junk. Moody's currently rates South Africa higher than the other agencies. A downgrade will place us one notch above junk across all major rating agencies. Well, joining me on the line now is Aurelien Mali, Vice President and Senior Analyst at Moody's Investor Services. He joins us from Dubai. Good evening to you, Aurelien. You've put us on watch in December. This does seem quite soon. Can we read into that Moody's was disappointed with the budget and with recent developments?
Good evening. I won't say disappointed. We put a negative outlook in December, and we took the decision to put the rating of South Africa government under review for downgrade. And it's really to try to assess if, to what extent the government policy is likely to be able to stabilize the economy over the medium term and restore fiscal strength while you have iron volatility in domestic and international markets. And for that, basically, we want to assess the likely effectiveness of government plans for the structural constraints, such as the infrastructure deficiencies, but also the likelihood that the budget that has been announced will be implemented as intended and achieve the state objective of consolidating the public finances. And it's the reversal of the deterioration of the fiscal strength that occurred over the last few years.
Aurelien, I'm asking you about timing. Yeah. Couldn't you have waited? I think here in South Africa, we do feel like things are maybe changing, a closer relationship between government and business, all efforts to avoid a downgrade. What I'm saying is, why so soon? Couldn't you have waited perhaps for the mini budget for later in the year?
We take our decision based on our analysis of economic strength, institutional strength, fiscal strength, susceptibility to event risk. South Africa is facing right now a period of a lot of adverse shocks. For example, you have the droughts that have also affected the growth rate further. We revised down our growth rate to 0.5% for 2016. Rate hikes because of inflation pressure, because of price of key grains, and at the same time, the cost of the debt is increasing in a world of increasing interest rates. So because of that and the signal sent by the budget with the new budget with the ceiling, spending ceiling is very important, but we need to discuss over the medium term because our ratings are forward-looking, and this is important that we try to look at all the scenarios in this difficult environment.
Aurelien, understood. The Treasury says that it will be meeting with you. It will bring various efforts that it's making across our economy. Do you come with an open mind? Can you at least be convinced that our government is doing what it can?
This is exactly what we try to do all the time. As you mentioned at the beginning, we still rate South African government bonds the highest among the rating agency. We are well aware of the strength of the country, the very deep capital market, the sophistication of the policies, the strong corporate. But when you look over the last 8 years or so since the crisis, the debt has also doubled. And today, more than 35% of the debt is owned by foreigners. And so you have some volatility and the cost is increasing. So there are questions in a sense that maybe today the balance sheet of the government is not as strong as before to withstand further negative shock. And it's true that the global environment and the current situation is not helping. So the budget is a strong signal, and we need to discuss and review the situation with the authorities and all the stakeholders to make a decision.
Aurelien, a final question for you. Many would argue that we're much better off than the likes of Brazil or Greece. And yes, a downgrade, even though you're not putting us to junk, it could have implications itself for investor perceptions. Do you keep those in mind, the very important implications for South Africa?
We try to be as professional as possible, and we understand this question, but our work is to try to assess credit risks for the investors that are buying government bonds and will hold them till maturity. And all the decisions we take are credit, are rating action. It's because of credit condition and based solely on credit factors.
All right. Thank you so much for your time this evening. That was Aurelien Mali, Senior Analyst at Moody's, on the line from us, for us from Dubai.